Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market rundown. So on Friday morning, we started the morning saying if we cannot break the high of Thursday, we're likely going to see a daily inside bar. And that means a tightening range. And our ability to recognize that is because the candlestick from Thursday was so large and we were going to be opening just under that high. And of course, if we cannot break that resistance, we're going to consolidate. But the bulls had a lot of space where they could consolidate and still hold that low of yesterday. So that is how it ended up playing out. And trade game plans for Friday, depending on which direction you were looking at, both could have been based on that candlestick from Thursday. So what I mean by that is as we headed into the morning on Friday, headed into the bell, we said if we can't break 293, let's see that high of the day during regular trading, if we can't break 293.62, that's a potential top fish. Look for bearish entries. And then as we pulled back, we were looking at the low of Thursday as support, 289.01. We essentially bounced 64 cents above support and saw a really nice rally into the end of the day after rejecting just about, 40 cents? 38 cents from the high of Thursday. So pretty much just a tightening range contained within the range of Thursday. So where do we stand heading into Monday? If we break this inside bar bearish and break those lows of 289.65 and 289.01, break those levels, then that will be the top of the bounce, and we'll look to pull back and form a higher low. Remember, we're looking for an equilibrium pattern. We've got our high, low of the dump, high of the bounce, and if we break this inside bar bearish, then we're going to scout for a higher low compared to our bottom of 281.72. If the inside bar breaks bullish and resistance of 293.24 and 293.62 break, then the bounce has not topped out yet, and we will be looking at still waiting for a lower high to form. I certainly would not be looking bullish on a break of that resistance level because that daily lower high is likely going to form sooner rather than later. Pretty much, I am going to be, again, it depends on where we're looking at the open pre-market on Monday, but I'm still looking bearish, more comfortable going bearish, looking for the daily lower high to be set than I would be looking bullish even if we break the high of the last 2 days. If you're in bullish positions, you're watching the hourly uptrend, which is still intact at this point. We didn't really see any consolidation during regular trading the last couple days. And then on Friday, we consolidated. So we could say our hourly higher low is 289.65, hourly lower high at the end of the day. There's our tightening hourly range we're going to look for that to break on Monday. IWM, very similar, but a weaker close down near the low of Friday and the low of Thursday as opposed to near the high. So again, if that inside bar breaks bearish under 150.03, we're going to look for a higher low to try and form compared to 146.21. And the bulls are hoping that they can keep the hourly uptrend, again, taking off extended hours. If we roll over with the lower high and lower low, even if SPY has not done it yet, this is why some people watch IWM as a potential early indicator, because if IWM rolls over on the hourly and loses that hourly uptrend, that could increase the odds that SPY is going to top out on its bounce and start to look for the daily higher low as well. QQQ, same scenario. So one thing you'll notice, and I do a morning whiteboard every morning for members where I spend 45 minutes first thing pre-market going through the major tech sector names, the major sectors in general, and just writing out a couple sentences of technical analysis pointing out key levels. And what's notable is after moves like this, it's so clear that correlation syncs up in the market. When there's high volatility and then we start to look for that tightening range for volatility to shrink, those are scenarios where correlations are very high. And I know that my point in referencing the whiteboard is every morning, on Friday, I was able to just say same thing as SPY and then the two key levels. Same thing as SPY, same thing as SPY. And it's really just once you have the picture of what the market is doing, you pretty much know what every individual name is doing. And when we're not in these periods of high volatility, correlations are not that strong. And I have to write out a few sentences because the setups are very different for individual names. So that's certainly an observation. When volatility picks up, correlation is the same. And as you'll see going through this video, it's the same thing for all these sectors, for a lot of them I should say. Daily inside bar. If we break support of 185.03, we're looking for the daily higher low to form compared to the bottom. And if we see the inside bar break bullish, top of the bounce has not been set yet, but we still will be looking for a lower high compared to the all-time highs. XLF, slightly stronger. So it's also easier to note the differences when individual names are not doing what everybody else is doing. And the fact that we broke the high of Thursday, 27.27, not by a lot, but it is a slight difference. So the hourly uptrend on XLF, still intact. Again, removing extended hours just to make it a bit more clear. Higher low is 26.90. Did get a bull break, not a ton of follow through. As long as the bulls hold 26.90, the bounce is underway. So if we lose the hourly uptrend, top of the bounce has been set. If we keep the hourly uptrend, top of the bounce has not been set yet. XLV, also stronger, getting follow through. Hourly time frame in a clear uptrend. Anything above 90.61 keeps the hourly uptrend intact. And as far as resistance goes, 92.52 is what I would consider the high before the dump. So if 92.52 were to break, that would be very notable, breaking the daily lower highs, which have been very clear since that top. Lower high, lower high, lower high. If we break 92.52, it would be notable, but otherwise it's just another lower high in that clear little downtrend pattern. XBI. So broke the high of Thursday, but just barely, pretty much a double top. Hourly time frame, lost support. So if we look at the extended hours here on XBI, we had an hourly higher low from Thursday. That has been lost. So the hourly uptrend is lost. The odds that our top of the bounce have been set are more likely on XBI than any other name that we just looked at. So if we pull back further on Monday, 83.13 is support, and we're looking for a daily higher low compared to 80.45. What's notable on the weekly time frame for the biotech sector, again, we are just patiently watching because this 10-month equilibrium is a beauty, and the longer these equilibriums play out, the better the breaks are, as we just saw with gold after a 2-year equilibrium pattern. It broke bullish. We're looking for the higher low to be set. 79.31 was the must hold. We bounced off 80.45. Anything under 89.30 is just a lower high. Let's see if this market bounce can make the bulls a bit more comfortable. If they can make their way into the upper $80 range, that would mean that this pattern is still intact, and we would look for this pattern to break sometime late August, early September. Probably early September. And again, don't forget that this pattern on the weekly time frame, I'm going to cover oil in the commodities video later this weekend, but it's the same pattern. The difference is slightly different. We held that low, double bottom at 50.59, so higher low is trying to be set, but bulls have less wiggle room and less space to work with, whereas right now we are about $3.75 from a bear break, so we can roughly call that 7% from a bear break. And if we were to look at the biotech sector, which I just pulled off the chart, it is further. Let's just make sure. So XBI on the weekly time frame, a bear break is 79.31, and we are, well, it's actually fairly in line. We're about 7% or so above that level. Bottom line is those charts are very similar. I'm keeping an eye on those longer term equilibriums, and I'll talk about oil more in the commodities video. Looking at the VIX here, so the VIX is a daily inside bar. If it breaks bearish, we have not found a bottom yet, so support is 17.30. And if it breaks bull and we get over 19.40 on Monday, then we'll say our higher low from the equilibrium has been set, and we would look for a lower high compared to 24.80. There were a ton of headlines on Friday where Trump said this, Trump said that, and what it all boiled down to me, I came back midday and saw how many headlines people were posting of what Trump was saying. And yes, it absolutely had impact on the shorter term time frames. The 5-minute chart to just see, it actually was a falling wedge. Didn't see that. I wasn't trading on Monday, or I should say on Friday. But this was a bit of a falling wedge, just in the sense that we kept hitting new lows and not seeing any follow through. And here it was more of a channel than a falling wedge, but if you were to change time frames, you would be able to draw a falling wedge pattern. And it broke bullish, and just, again, a lot of volatility with negative reaction to what Trump was saying, and then some bullish reactions later in the day. The bottom line of what I want to prove here, or my point, is just that daily time frame, technical analysis, first thing in the morning, I was able to say, we're very likely to see a daily inside bar. As soon as we rejected from the high of Thursday and hit a new low of the day, that instantly shifts the odds. Daily inside bar, tightening range, not a ton of trading opportunity, and especially on a Friday. So really all those headlines to me were just noise, where the most likely scenario played out regardless of what those headlines were or what the reactions were in the short term. So it was just a reminder to me of something I always remind myself, where news and headlines, yes, they're important to pay attention to. Yes, they have impact on the 5-minute time frame and short spurts of action. But bigger picture, it's noise, and a lot of what we need to know we can get without, listening to the talking heads. And I stopped watching CNBC while trading about 4 years ago, and profits have been just fine without it. So I appreciate you watching. Have a good weekend. Do good things. We'll check back in with commodities and USMJ and some cryptocurrency videos later.
Hey guys, could you not do that to my plants, please? Hey guys.